Over the long run, the stock market is one of the best places to put your money to work. Most investors buy and sell stocks through online stockbrokers, and competition among the best online stockbrokers has never been higher. Are you ready to begin investing but aren't sure where to start? No worries, we are here to help. Welcome to the From Zero to Wealth channel. If you're new here, this channel provides you easy to understand information about wealth creation through personal finance and investing, teaching you what schools should have. And if you're returning, welcome back. In this video, we'll be talking about what an online stockbroker is, the difference between a full service and a discount broker, a list of 6 best trading platforms, and what to look out for in choosing a brokerage account. An online stockbroker is a professional financial license firm whose customers can buy and sell stocks in a brokerage account through an online trading platform. In exchange for a commission on every trade, these brokers send your orders on to stock exchanges and market makers, which actually do the heavy lifting of matching your buy order with someone who wants to sell, or vice versa. When it comes to buying stocks, you can't just buy a stock through your bank account or call the company and buy shares. You need to find one of the best stockbrokers. The brokerage industry has changed dramatically over the past couple of decades. The stock exchanges, as we think of them from the movies or on TV, don't really exist today. To buy a stock, you used to have to call an individual, known as a stockbroker, who placed the order on your behalf. This process was complex and expensive. Brokerage accounts are a gateway between the investor and the investment professional. There's a big distinction between full service and discount brokers. Just as the process for processing stock trades has changed, the terms we use for the people and businesses who facilitate trades have changed too. Today, instead of using the term stockbroker for any brokerage firm that deals in stocks, we generally divide companies into 2 categories: discount brokers and full service brokers. You'll find differences in the level and types of services as well as cost when you consider a full service versus a discount broker. The choice you make can have a big impact on your investing experience as well as how much you have to pay to invest. A discount broker is a company that allows you to buy and sell stocks or other investments online. Think of this as a self-service option for investors. As a customer, you can direct the process of buying and selling stocks or sign up for an account with a robo-advisor that will automate your investments. Many discount brokers have features that help you decide how to direct your trades, but typically there's no human broker taking and filling your orders. Virtually all online stockbrokers charge $0 to place a stock trade and also charge low fees for other products and services. In addition, discount brokers tend to have lower minimum investment requirements or no minimums at all, and easy to use online trading platforms, making them accessible to everyone. Many discount brokers also have educational tools and resources available to help guide your investing. For the vast majority of investors, especially the beginning investor, a discount broker is the best choice. Think of a full-service broker as an old-school broker. Full-service brokers are more closely related to the stockbrokers of days gone by. Full-service brokers often employ human brokers who can help you make a trade, find mutual funds to invest in, or make a retirement plan. That said, full-service brokers are costly, since people are inevitably more expensive than computers. The main downside to a full-service brokerage is the high cost. Commission rates aren't quite as high as they once were, but you can still expect to pay a lot more per trade with this kind of service than you will with a discount broker. Those who take advantage of management services often pay a percentage of their total assets in fees each year. Typical full-service offerings are priced from 1% to 2% or more. You could pay thousands of dollars in annual management expenses. Full-service brokers are best suited to high net worth investors who want a personal level of service and dedicated investment portfolio management. Discount brokers are most appropriate for nearly all investors. We know everyone's financial circumstances and goals are different, so we've chosen a variety of brokers to help you find one that meets your needs. Here's a review of our picks for the best online brokerage, including for beginners. Oh, and a little side note, this video is not sponsored by these online trading platforms. Fidelity is a solid broker for investors who want a well-rounded broker with excellent customer service and low fees. Fidelity is one of the few larger brokers to offer fractional share investing, and it also has a branch network throughout the United States. This trading platform is best for DIY investors. This one you have probably heard many times, Robinhood. Robinhood was founded to help provide everyday people with easy access to the financial markets and develop the concept of zero-commission stock trading. Robinhood is a good option for investors who want a standard brokerage account where they can buy and sell stocks and cryptocurrencies through an easy-to-use app. Robinhood allows users to buy fractional shares of stocks and also is one of the few brokers to offer commission-free option trading. Merrill Edge is a great choice for investors who want the choice of stocks, bonds, mutual funds, ETFs, CDs, and options. Merrill Edge is an especially good option for people who want access to real-life financial advisors, as Merrill is owned by Bank of America and has advisors in many of its branches across the country. This brokerage is right for you if you can make the most of the free stock and ETF trades. You trade options occasionally, but not heavily. Merrill Edge isn't the best stockbroker for options, since the per-contract commission is slightly higher. And if you value customer support, Merrill Edge is one of the few discount brokers that has a large branch network in every single major metropolitan area. If there's a Bank of America office near you, help is just a short drive away. Merrill Edge is best for managing finances under one roof. TD Ameritrade is one of the most popular brokers in the world, and for good reason. The platform is a great fit for investors who want a well-rounded brokerage experience, great customer support, and lots of account and investment options. TD Ameritrade has excellent educational resources for beginners, several trading platforms for investors of all skill levels, and pretty much every type of brokerage account you can think of. Charles Schwab is one of the top brokerage firms with an asset of $6.60 trillion. Charles Schwab is a good brokerage choice for investors who want lots of investment and account types options, several ways to get customer service, as well as great banking and cash management products. Schwab offers some great features such as fractional share investing and also has an excellent robo-advisor platforms for investors who want to take a more passive role in their strategy. Another top brokerage firm is Vanguard. Vanguard is a good broker for investors who want to put their money into ETFs or mutual funds, particularly Vanguard's own. Vanguard's low-cost ETFs and mutual funds are rarely on any broker's no transaction fee lists, but investors can certainly buy them directly and avoid commissions. What to look out for when picking a broker account? There's no perfect broker for everyone, but here are some of the important factors to keep in mind as you're looking for a broker account. Here are some of the features we looked at when deciding which online stockbrokers were the best in the business. Commissions and fees. Basic online stock and ETF trades should be free. Investors now pay $0 commissions at most online stockbrokers, and some even offer options trading for free, which can be particularly valuable for active traders. Most online brokerages charge commissions for mutual fund trades and other services you might need, so it's still important to compare fee structures. Mutual funds. While most brokers charge a commission for mutual fund trading, it's also important to know that most have a list of hundreds or even thousands of funds that trade with no commissions at all. ETF investing. The best ETF stockbrokers will not only have $0 online commissions for ETF investing, but they also tend to offer access to a wide array of branded, low-cost ETFs. These branded ETFs are managed by the stockbrokers analyst teams themselves, and they often include rock-bottom expense ratios. Options investing. A well-rounded stock brokerage account will not only offer access to investing in stocks, ETFs and mutual funds, but also options. Some options trading platforms include $0 commissions for online options trades and high-quality trading software across online, desktop and mobile devices. Account minimums. Many of our favorite online stockbrokers don't have account minimums, but a few do. If you're a beginning investor, it's important to verify that you can meet any minimum investment requirements before you select a broker. Features and support. If you're interested in taking your investing to the next level and learning how to choose individual stocks and direct your portfolio yourself, look for a platform that includes educational resources, research, news, and customer support that will help you make smarter choices as you learn the ropes. And one that offers more advanced trading features you can use as your knowledge grows. Educational resources. When you're new to investing, you may not be familiar with key terms that are necessary to manage your account. Many stockbrokers for beginners have an educational resource section loaded with information that can help you learn more about investing and gain confidence. Here's why trading commissions are so important. Say your broker charges a $6.99 commission for online stock trades and you have $1,000 to invest. You want to spread your money across a portfolio of 5 stocks. To make your initial investment, you'll pay nearly $35 in trading commissions. On a $1,000 investment, you're effectively starting with a 3.5% loss in your portfolio. Plus, you'll pay another $6.99 each time you add to one of your stock positions. If you're planning to build up your portfolio over time, it's not hard to see how this can cost you thousands of dollars over the years. That's it for this video. We hope you find this video helpful and have an idea of which brokerage accounts to choose. If so, like this video, subscribe to the channel for more videos and turn your bell notification on to get notified when new videos are uploaded. Thank you for watching and we'll see you in our next video.